Good morning, and welcome to the Deal Room Live, the daily real estate deal tank powered by Titan Impact Group, a global leader in AI-driven real estate investing and funding, where the real estate world meets speed, precision, and profit. And bring us your deal so we can put it into our AI model that analyzes and structures real estate deals in minutes, generates all the docs you need to get the deal done, and gives you a verified, unbiased breakdown of due diligence report. The investors get the advantage of getting fully vetted AI-analyzed deals that cut their due diligence time down by 60%. So you're in the right place. Let's open the deal room now and get into today's opportunity.
Yay! Good choice.
There she is. Hi, honey.
Nicholas.
Good
Super happy you're
morning,
here.
everybody.
Welcome. So to Keisha, she is just extraordinary, a huge ray of sunshine, and super excited that she's here. We're going to be doing some really cool stuff with her. So the podcast is getting a little bit of a late start. We have been on back-to-back calls and meetings since 7:30 this morning, closing on a data center, closing on getting the LOI sent for Katya's thing, her deal. We've got the RV park that we're closing on. Multiple things happening simultaneously. Most people do one thing at once.
No,
But we decide to do 100 things at once because, why not?
that's for sissies. Nicholas, we're promoting you to panelist so you can be in active conversation. And you're free to decline if you want, but we'd love to have you be here. As Catherine said, not on the one-way street to nowhere. There you go.
Okay, and Tommy is joining us from the jet.
I believe Nicholas is a professional underwriter since he's a new name.
That's correct. I work with Josh Zaglaski.
Somebody in the.
Oh, I love that.
There you go. What conference is Josh at right now, Nicholas?
He's at a Zenith Group event.
Yeah, it's a master.
Yeah, it's a mastermind with Tim Robbins.
He's at right now, and super cool. Very cool. I'm going to head into the office right now. Go ahead and Catherine, crank it up with some introductions real quick. Maybe even talk about the message we had this morning with Katya over option C on that multifamily deal down there in Tempe. We want to pull that conversation up.
Katya isn't here, and that was on her chat. That's okay.
Right. I think we have some notes on that meeting though, because we hosted it, right?
Yeah, but I can't access it while we're here. If that makes sense.
We still need to. I still want to talk about the deal. It doesn't matter.
Yeah, for sure.
Just go find information about it. It's in my chat. So it's the Tempe deal.
Okay, so while I'm finding that, let's go ahead and just go around and do 2-minute introductions. Your name, where you're from, and then what asset class you're focused on inside of all the fun real estate investing. So who wants to go first? Because I'll call you all out.
I'll go. My name is Laura Miller. I live in Richland, Washington, which is southeastern Washington State. And I am a real estate investor, and my current primary focus is creative financing in the residential space.
Love it.
And I tag Tracy.
There you go. Tag people.
Yay. I'm Tracy Gore. I'm in Oklahoma. I'm an investor in multiple asset classes, real estate, debt, film. So right now I have a film opportunity that I'm raising for oil and gas. Catherine and I partner on oil and gas funds. So author, speaker, all the things. And I'm happy to be here. Do I need to tag somebody? Let me see who I got. Is it Dewan? Is that right? Did I say it right?
Yes, ma'am. How you doing? Dewan Savage, Charlotte, North Carolina. I'm a real estate developer and a licensed builder in North and South Carolina, working on my Georgia and Virginia license as well. And I invest in real estate. I'm a land developer. I develop land from the ground up, horizontal and vertical construction. And I'm just here to learn, pitch deals that I have on the table. We also source our own land. So we wholesale some deals that we get. We entitle land. And if it's something that we can't take on, we'll sell the paper. And I'm going to go to Taikisha Ack.
I'm it. Good morning, everybody. I am Taikisha Hearn McNulty. First, I want to say it's an honor to be here. I was invited by Catherine, so I'm here to learn. I'm here to absorb
I'm just blessed to obtain the wisdom and just to kind of just hear what's going on. But I'm an author, a speaker. I'm a nonprofit owner. I'm working on sustainable housing, turning recycled trash into treasure, into sustainable building blocks. So I am just excited to be here. So I'm not sure where I'm at yet, where I land, but I'm just blessed to be here. So
You're at the very beginning where it says start here.
I'm start here. That's where I am. You got to start somewhere.
I think that's a good spot to introduce the Landshark Investor Survey. We have this GPT model we created that's kind of like a Briggs-Myers personality test. And the reason is Catherine spent 20 years jumping from asset class to asset class. She did a couple fix and flips, like 500 of them, and figured out she didn't like doing that. And then, buy and hold was not her favorite with tenanted toilets. And, she started working her way toward the asset class she's in now. But after 20 years of investing, she's done a lot of things and realized that she likes to, be the bank and rent the dirt. And it was with with that mindset that we built the investor survey. So if you're new in the journey, or you've been on the path for a while and you're not sure what your next step is, this real estate investor survey really breaks down, based on your answers, what kind of mindset you're in and the direction you're headed naturally.
I love it. I love it.
So if you go to ChatGPT and you go over to the search GPTs and you pull up Landshark Investor Survey, and it'll show this orange and turquoise little logo. You go in and you start your chat, and it says, I'm ready to take the Landshark Investor Assessment, and literally just follow the instructions. It's as simple as that. And so it's 125 questions. And you can literally use a little microphone down here to talk to it. And that actually will get you through in the whole thing in usually about 20 minutes. If you choose to type, it takes about 2 hours. We've asked a lot of people. That's why we know.
There's a few questions that make you put thoughtful answers to it. The idea isn't to sit there and write a dissertation or make this about, an act of Congress. It's literally just to get your answers out of your head and onto paper. And then the results are amazing. Is Trevor in here today? Because he just sent his results the other day. And we had we created his 30, 60, 90-day plan and his 12-month blueprint. And so that's what we do with that assessment is after you complete the survey, if you email me the results, I put it through our real estate investor virtual board, and our virtual board goes through it and comes up with, the highest and best use of your time, your energy, your resources, all based on the answers you provided.
Wow. I am so excited. I am so excited. I will definitely take that survey.
This is just a nugget of information. We believe in dropping gems and giving people value in what we do. And the only way you can really do that is to engage them, right?
Amen.
So getting the survey available to people is the value. What you do with it is how much value you get. Right?
Amen.
So we build it, and you do something with it. That's the goal.
Amen. Yep. Thank you.
So everybody, make sure that you go and you do that survey. If you haven't, I know that almost everybody's done it here. I know, Blake, you're on your way to work. Do you want to do a quick introduction?
Yeah, let's finish out the introductions real quick. I'm about 4 minutes away from the office, so I'll be in front of the whiteboard real soon.
No worries. I'm just about to start driving. So my name is Blake. I'm from Mission Viejo, California, and I'm a new investor. So I took the survey, and one thing that it actually partnered me with is commercial real estate. So right now I'm trying to look into a storage and potentially kind of like a car wash deal right now. But essentially something I'm interested in is commercial real estate, but my options are pretty open to what it lines up with me myself. So I'm new to all this, but I'm just trying to learn every single day.
Super proud of him. And Katya, who's not here, that's the introduction we made. So you're going to see a lot of college and university students coming into our program because they're figuring out that college may or may not be setting them up with multiple streams of passive income. Just saying, And these kids are super smart. I shouldn't call them kids. These young adults are super smart, figuring out maybe there's a better way, like getting a mentor, which is pretty awesome. So I am like tickled that they are here all joining us whenever they can, which is pretty awesome. Nicholas, we'd love for you to do a quick introduction now that everybody is here.
Yeah, so as Tommy mentioned, I am an underwriter kind of by profession. I also do asset management, property management, for the assets that we own. Currently, our portfolio consists mostly of retail and fast service restaurants. And we have quite a few residential units that we do Airbnbs for short-term rentals on. And then we're just looking to expand. We've had industrial before, medical office. So we're constantly looking and buying up, typically syndicating. Yes.
That's one of my favorite asset classes. We just closed a deal for our investors and they made a 45% ROI. They were pretty stinking happy on our medical office. So we love those.
That's amazing.
This is awesome. Yeah.
Yeah, there's a lot of value add in those when you can find them at the right time and get a good tenant in there.
Yep. Love that. So Nicholas, I'm excited to talk to you more about that. Jermaine, we'd love for you to just, where are you from and what asset class are you focused on? We're doing quick introductions.
Oh, hi. I'm looking to get into a lot of fix and flips. We're a custom home builder from Toronto. Recently moved to the US and just trying to get myself acquainted with the real estate market down here.
I love it. Well, I'm a fellow Canadian and been down here for a minute and did about 500 fix and flips. So we could share some fun stories.
Yes, please.
So excited that you're here. This is exciting. I love it. So Tommy and I were sharing this morning, one of our mastermind members here, Katya, who can't be here this morning. She was on a call with us at 7:30 this morning, brand new to this space. She's one of the college students and found this incredible opportunity actually here in Arizona. She lives in California. And we're going through Tommy and her were going through the LOI process, and he was educating her on that. So Tommy just walked in. I found the notes and super excited to have Tommy teach us all this whole negotiating. And one of the things we were sharing with Katya is that you have to understand what the seller's motivation is, and it's not always money. Like the septic tank company, he literally wants to go fishing once a month. And because Tommy has the connections to take him to Alaska once a month and go fishing, like that literally is his motivation, right? So, and to avoid taxes, right? So a major deal. So it's not always like, oh, they just want a lot of money. It's like, hold on, there's tons of implications to this. So
do you know how much tag? I know I have a mic on, but
it's right there.
I'm pretty loud. To get this thing fired up. Do you know how much taxes they charge for going fishing in Alaska?
What?
How much the tax rate is on that?
No.
Anybody got a clue?
No.
I can guarantee it's nothing. Like I never been charged one. The only tax I got charged was the marriage tax. Like when I was married and went fishing, it usually resulted in the divorce tax, which was half, right? So
good morning to you too.
Good morning,
Do
everyone.
your introduction.
My name's Tommy D. I'm a troublemaker. I mean, the creator of this wonderful mastermind with three other partners, Catherine Bell being one of them over there. Then I got Roman Rubio and Dr. Ning Young Chen. We all came together, came up with the Landshark Mastermind because we wanted to be the beacons. We wanted to be the guidance in moral and ethical development within the path of progress ahead of corrupt government and big businesses, and Wall Street, like BlackRock and Vanguard and all those guys. Like they're the ones controlling the real estate market and price and all that. And so guess what? The only way to compete and play with them is to join them. Like, as my daddy used to say, when you can't beat them, join them. And the reason is because if you don't, they're going to get ahead of you and you're going to work for them. Right. And so it was not necessarily join them like I'm going to be a bad guy with them. I'm going to be a bad guy to them. You see the difference?
With the dance?
You're damn right. So, because ain't nobody got moves like Jagger like me. Let's get this up here real quick.
Interesting facts. Tommy has better moves than Jagger.
I got moves like Jagger. Maybe a little bit better than Jagger, but maybe not. Anyway,
Do you want to turn off the light?
And hit the buttons over here and get my.
We're having a feisty morning, everyone.
getting my Canadian Dry open because my Canadian Loud is way over there. So
Wow.
Loudest Canadian on the planet.
Laura, did you just give me a wow?
I did.
Yeah.
All right.
Okay, so what are we doing?
We're
So
gonna
I
look at this
found-
deal. I'm
So
doing some weird shit over here on this. Stop that. Save that. We got to get TikTok going. Hold on, folks. Hold on. I drove all the way home to get the TikTok phone.
oh, if all of you could do me a favor and go over to Facebook, we're Facebook Live. If you could share it and comment in any of the groups, Tracy, if you can share it in the Wealthwise Women group, all of that. We're trying to like get the viewers up. Anyway, that's a whole other side note. Okay,
This is Blake. This is Blake Steele. And
so I found, here's the notes from Katya's conversation this
all
morning.
right, go ahead and just see if
Want
you
me-
can grab whatever. Like,
Want me to grab it all?
no, just the summary right there, like that. Yeah, and then take all that and bring it over there. It's fine. Put it like I know we had a
Deal Hunter?
conversation with Deal Hunter. So just if you don't mind, can you placate me and go search real quick and type in Gilbert.
Gilbert,
That's the name of that. That's the name of that property right there. So Gilbert.
LOI
Property
review.
review, no property review and saturation. Click that. Okay, so
Share
it's
with everybody.
it's all here. Yeah, go ahead and share this whole screen with them.
So this is a conversation we've been having inside of Deal Hunter chat. Oh, this is the OZ Wizard.
Yeah, because again, what we're doing is this isn't an opportunity zone,
Okay.
right?
Yeah.
And so this is the part about it that I've got to do some continue to dig in with this. So let's go ahead and bring everyone up to speed. This was go see if you can get all the way up to the top.
Okay.
And see what we can find.
And you guys can follow along by going to ChatGPT and pulling up the OZ Wizard 2.0 ChatGPT.
Click on the 1035 East Curry Road deal. Let's see if it'll pull it and pop it up here. Okay, so who remembers this, right? This was the rare Tempe multifamily development opportunity, 2 parcels, 5.87 acres, located in an opportunity zone, blah, blah, blah. Remember this?
Yep.
Raise your hand.
Yep.
And really quick, for those of you who are new, Katya has only been in our mastermind 4 weeks. She is a college student who is literally taking notes and here every single day learning from us. And she's the one that found this.
Right.
And
So
we're working with her to make this happen.
So important notes to take here. Tempe Town Lake over there. You got ASU 202 Loop. All of this is becoming, you can see the name Scottsdale Road in the background. Like this is becoming the place to be. This is becoming the cool place to live. Phoenix Sky Harbor is way over on the other side.
Yep.
But that North Bend Apartments right there was what we had to worry about because like with North Bend going in, scroll over, go to the next slide, you'll see how close these two things are. They're right next to each other with a lot of infill between them. And you can see that what's infill there is just vacant lots and car storage. Like literally, these are car dealerships right there, those two, right? And so North Bend going where they went, that's cool. And all that, but they built all that out. They're starting their next phase on this backside. They're adding another 80, 100 units. Like if we started construction tomorrow, like we wouldn't have one tenant for the next 36 months. Excuse me. So let's go over back into Deal Hunter where we were, or not Deal Hunter, OZ Wizard. And I'm wanting to kind of just stay in OZ Wizard. If people don't know or understand GPT, we want to teach you guys about this. Because it's important to understand OZ Wizard is a model. We gave it rules. We told it exactly how we want it to operate. Okay. And we want it to operate this way every single time. So when we built the OZ Wizard 2.0 GPT, we literally can give it property and it's going to apply all the rules that we taught it to that property. And then we're not having to sit here and do a bunch of back and forth with it, right? It just straight, here's the details. So let's go down and talk to it for a minute. Because what we did was.
Do you want me to paste the notes into here?
Go ahead and paste the notes there from the call.
Okay,
and then
you want to
give me a space. I'm going to talk to it. So we sent over an LOI, and the LOI was that the seller wanted to give us an opportunity to owner finance it. But we gave them 2 options. Option A was no money down, 5% interest only payments, 2 years. And a balloon payment of $12 million at the end. Option B was $4 million up front, no no interest payments until the end of 24 months. And he assumed we were going to pay him 5% interest only at that time. And I was like, no, like you don't get chicken and egg at the same time, right? You either get a wet chicken or a dry chicken. I don't care which one, but you don't get both. So when we negotiated that, I said, okay, so for the option B, if we give him $4 million down, like we're going to not have any monthly holding costs, but I'm also not interested in giving him $1.1 million on the flip. So I was like, no, what we want you to do is like carry the $8 million, give you the balloon, but then you're going to go 0.5% interest flat, like $8,000. And they're like, oh, we don't know if we like that. I don't care. Like, I'm not interested in what you like. I want it to be a win-win-win. And if you want it to be a bigger winner win, that's not going to work. Right? Because we can still win with the payment. So I said, let me see how I can make it a win-win-win again. We went back and gave it these notes and said that we wanted it to be option C, was that we give $4 million cash up front, carry that, put that on a debt with one of our private lenders. The 8 million would be converted to equity. And the reason why we can convert that to equity is so that we can give him a preferred return month, like a K1 disbursement, like an investor, and give them $8 million of a $30 million fund that we're going to start to do this project anyway, right? To get this thing to shovel ready for the Opportunity Zone Fund to come in and buy it, we need to make it shovel ready. The only way to make it shovel ready for them is to invest somewhere between 18 and $22 million to get everything done there that we need to do. And that is maybe even buying up a couple of those other smaller lots right in there to kind of help us get that development underway. Because what we'll do is we'll get it ready to become, I think it's currently set up for 64 units. We can probably blow it out, especially if we get a couple other pieces there. We can probably blow it out to about 150 units, but make them full luxury. And I want to go up, excuse me, the area would allow for multifamily, but I wanted to also allow for MPUD. Look that one up. I think Nicholas might know what an MPUD is, right? Mixed planned urban development. So what we're going to do is we're going to maybe put some retail down on the first floor and then the houses up on top and luxury at the top, right? And so build it out to have the 64 units of nice apartments with the, another 60 units above that on, because now based on when they started the project now, there's other buildings that have broke the skyline barrier and gone up higher. They've changed some of the zoning rules. And we can go in and say, hey, like, let us get full luxury in an opportunity zone, right? Just because it's opportunity zone doesn't mean that it has to be like affordable housing. Does not designate affordable housing. So go ahead and run this prompt and bring us up to speed with this deal now and review the notes. The nice thing about GPT is that it lets me ramble as long as I want without interruption. Why did it zoom on Tracy's face when I said that? That's crazy.
Wow.
I'm just saying.
And Catherine, Dewan had posted something in the chat. Do you want to just?
Yeah, go.
I found it. I found the OZ Wizard. I gotta find that the survey now. Because I guess I just have to type it in. I couldn't. I have to type it in by title for it to come up.
Yes. When you go to the Explore GPT store, pin the full title Landshark Investor Survey, and then also type in OZ Wizard 2.0 GPT. And then,
Laura, can you go grab that and put the link into the chat?
Thanks,
I just did it.
Tracy. Beautiful.
That's nice right there.
So there's a survey. If you can pull the Deal Hunter, Landshark Deal Hunter GPT, let's give them that. The free estimates GPT, and now, of course, the OZ Wizard GPT. Let's go grab all of those.
Or do you want me to get them?
Got it. Yeah, got it.
Thanks.
And then when you guys open them up, you have the option. There's 3 little dots to the right of it, and it'll allow you to pin it to your GPTs on the left. You just keep it pinned there. You don't have to go into the store to keep finding it every time.
Anybody opposed to moving on?
We are ready.
We're ready. Yep.
So here, what it says is that here's the deal now, right? And it shows that we have laid it out in a way that's understandable. So
So strategy, buy the land, operate interim cash flow, truck parking, on-site mechanic, 2 to 4 years. Annex entitlement, rezone position for luxury mixed-use urban development, retail ground, residential above, large unit count than prior concept. I love that we can be cash flowing this while we're getting it through annexation and entitlement.
Not a lot of people can do that, right?
Yeah.
Like a lot of people are like, oh, I got to buy this property and suffer on holding costs.
No,
Holding costs for this property are $50,000. If we had option A, this is the way I figured it out. Option A gives us $50,000 a month. But by parking 163 trucks there, we're going to make $84,000 a month.
Yeah.
And people are like, well, how are you going to know that you're going to get truck parking?
We're
Did you
renting
see
dirt.
where the 202 was?
Right.
Yeah.
Like, did you see where the highway was? Is right there.
You can
So
spit
like when
and
I
hit the
put a
highway.
sign out there that says truck parking,
Right.
like every dude with a, with a CDL is going to become my best friend. Hey, can I get over there? Yeah, you can. Like there's nowhere to park over there. So option B was the carry, the 4 million up and the 8 million carried. And then it shows that our monthly payment went to 33, right? It would total out to be about 33. Laura, say that for me.
Yeah.
There you go. So that shows again, our DSCR is over 2 point something points. I love that it says your exact no wet dry chicken. Like this thing is ridiculous. Anyway, option C, 12 million, 4 and 8, and then the 7% preferred return with the K1 style economics gives this opportunity. Plus, we wanted to tie in a 10% early redemption premium, meaning that if they have all their stuff together, they told me that they were so close to entitlement, all they needed to do was close on the property and entitlements would have been done. So if that be the case, give me all the documents and let us go ahead and put that back on the table and go right in and get it done right now. If we get it done right now, I can turn around in 2027, January 2027, and start pitching this as a $300 million project for investors to get into, because once we sell everything out, which we're about to go in and disclose here in a minute, like I think down there right now, luxury apartments are going for $47 a square foot. We can go look though. Like I'm pretty sure, but we can go look. We'll look at it in a minute. So keep going down. And so what it does is it provides the opportunity now for us to do so it did the interim cash flow underwriting for us. So it shows here that we have a fairly decent, DSCR rate. Keep going down. Shows here development of the by 2030 as totally possible and doable. Something that it's going to have Katya and Dalen, they're going to need to tighten up is the investable and enforceable LOI. So we're going to go through it and keep going. And that was the thing is if we give them that 8%, it's based on the fact we got it done faster. So that I'm really trying to get them to do that option C, because what ends up happening is if he gives us that 8 million in equity, we've already raised 8 million of the 30, which then means that we only now got to come up with the other 22 million to make all the magic happen, right?
Yeah.
And so with that 22 million, we're going to be able to get this thing 100% pad ready for a nice structure to come out of the ground. We're going to go into what all those doors look like real quick. And you know what? We're not multifamily developers. You know who is though? Caliber.
Yep.
We're going
Rise
we're going
48.
We've got State 48. I have at least a dozen multifamily
Oh yeah.
development funds
Tons.
that love
Sterling.
this stuff. They
Yeah.
love this stuff,
Yeah.
right? So let's go see how much money they could make. Hit the button for me.
The button.
Hit the button.
Button.
So there was a proposed amount of building going to be put here, and there was a door count in that PDF. Can you review that and let us know what it was?
We're having a party downstairs.
Yeah, there is. Big party today downstairs. Holy crap.
No cars, but there's a party.
No, there's still cars, shit ton of cars all the way around the back. And they're all parked down the side. And then I think somebody went out there and told them to clear it out. Oh my God.
Goodness.
Oh my God. Wow.
So they made me my own parking plaque.
Oh
Here we
my
go.
God.
Hold
That's
on.
awesome.
How do I remove spotlight?
That's awesome.
And then we're gonna spotlight. There you go. So here's my new parking plaque.
Wait, move it over a little. Oh, I can see now. Oh, that's so cute.
That's awesome.
I love it. Oh.
Turn it over. There's another one on the back.
Yeah, this is the This
Yeah,
one
that's
or this
that's
one?
not the
Oh,
doctor.
that's so
I like
them
you got the
both.
doctor and not the doctor.
That's
I
awesome.
love this. Oh
Doctor,
my goodness, I gotta
100%.
thank him. I love this.
Now she's gonna go suck up to Michael.
I'm not sucking up it.
Tommy. Tommy.
Uh-oh.
Always count on you to misbehave. Always.
I'm glad you're here more and keep them in line.
That's
Did
right.
I ever tell you about the teacher that used to carry a riding crop in her back pocket when I was in school?
A riding crop?
Yeah, you know what a
What?
riding crop is?
I do know what a riding crop
yeah.
It's
is.
about that long, and she would literally be able
So I
to
need to use one on you?
whack my
Right.
thumb.
Is that what you're saying?
Twist
No,
my
I'm
rubber
just saying
arm.
it
I'll
was
use
used
one
on me. I never said it worked.
Right.
Like obviously it didn't work.
Clearly.
Right? So-
You're
Clearly.
what you
It's
asked
like,
for,
no.
Tommy.
That I'm shocked. What?
The amount of effort you're going to have to put into reining me in is going to
Oh
be
my
way more
goodness.
than most people have been able to ever accomplish before. So
I can't with you.
Oh,
most people cannot with 100%
wow.
cannot.
I'm wowing you again. Wow.
All right. So are we
Still
still
working.
thinking back here?
It's still thinking.
All right. So let's jump off of this and go look at something real quick. I wanted to.
You could probably scan to the PDF and find it faster than it is right now. I don't know what it's doing.
Yeah, I think it's stuck. Click the skip, and it should just like you can answer somewhere. There we go. 64 multifamily units. There we go. That's what I thought it was. So the density. So what we're saying is we could probably do 100.
Here they come. Y'all got to see this.
We're not doing it.
I know,
I don't
it's so
care
fun.
about them.
Okay.
This is more important than
You're
that
right.
little group of adrenaline pump junkies out going out and knocking on doors illegally in places that say no solicitation, trying to sell you pest. I don't
Okay,
care.
so it's down to the bottom. Are you ready?
150 units. So let's hit the button over here. Let's get an over under on this property. We think we can go vertical with 150 units, but we're going to need to raise capital for phase 1 through phase 5, and we're going to have to also get a certain amount of capital for each phase. So can you give us a ballpark of each amount of capital we'll need for each phase, and then base that on the Tempe market for real estate and for construction? I'd also like to make sure that we're validating these sources of information for this. We want to propose 150 units of high-end luxury near the Tempe Lake area. So utilize any of the apartments that have sold in the Tempe Lake area, and make sure to use that as our material for running this deal.
So the thing that, for those of you who don't know, talking to your GPT will actually get you far better results than not talking to it. Like trying to type it out, it'll give you better results.
Yeah, she's filming the boys outside the window, even though I forget them. Basically, so you guys understand what's happening down there right now in Tempe. So Tempe is growing massively. They have an area called the Tempe Lakes. Tempe Lakes is actually just a dammed up section of the Gila River, the Salt River. They come together right in that area. And so I think it's just Salt River.
Is that side of the 202 Scottsdale or Tempe?
It's Tempe. So Tempe stretches about 1.5 miles north of 202.
Oh, I
Right.
thought the 202 was the like.
No,
Okay.
it's still a Tempe address on the other side of the 202.
Okay, that makes sense.
So with that being said, becoming city property raises the value of every unit in that apartment somewhere between 10 and 15%, right? So to actually have all city services and have city taxes and have city annexation raises the value of that. It's pretty much, pretty high.
I love it. It's pulling up Tempe Town Lake apartment sales data.
Yep.
Because there's been a ton of growth in that area.
And yeah, so you can see right there, they're looking at $500 to $600 a square foot. So right there, Skywater at Tempe Town Lake, 328 units sold for 112 million. That's 340,000 per. So we're at about a 340,000 per, right?
Yeah.
So with conservative underwriting on 150, we're looking at about a $50 million, the middle, and then the premium luxury is going to be about 63. What happened? Come on now.
Come on.
AOL messed up on us.
AOL.
Anybody still running on AOL? I talked
Actually, last week somebody had an AOL email address.
I know somebody. I have a call with her today. She's still doing AOL email.
Yeah.
Nobody's running on AOL internet, but there's still some AOL. You know why there's AOL emails out there still? Because you can't cancel them.
You cannot cancel
There's
AOL.
literally no way to cancel them.
They're going to send you a CD in the mail.
That's awesome.
And make you download the new version.
Yeah, totally.
Those are two like absolutely ridiculous statements now. CD and mail. Like who gets mail anymore?
I was thinking the same thing. Like, where's the CD gonna go?
Right.
Yeah. You can, no, there's still mail. You could still mail a CD. You just can't play it on. You can't access your right to one. You're like at a hard line remote unit to, yeah.
Yeah, for sure. So looking at this right now, we're in a situation where basically, yeah, the 50 million or 60 million dollars that area would go for, like totally makes sense, right? So we could very easily get this set up for an opportunity zone to take it over. So let's run a scenario on that. All right. So looking at this property, let's run through a capital stack scenario where we are able to raise the capital to do the 4 million. We get 8 million in equity. We raise 30 million for the phase 1 and 2 development. We then sell it to a QOF, or we create this into an SPV that a QOF can come in and take over, build out our case study scenario for this and call it the Tempe luxury townhomes. QOF. Okay. This is why we need to have sweat lodges and drugs for kids before they turn 14. You won't need that out there because we had sweat lodges and fed them mushrooms at 14.
They're calling it, you just renamed the city, Tommy. Now it's Tempe.
Tempe. Yeah,
his accent.
Tempe.
So the story in one paragraph looks good. The entity map.
Tight impact group.
Right. Type in impact group. It's still thinking, so let it finish thinking out. We can scroll through it a little bit. So
always interested in the capital stack.
Yeah, capital stack scenario shows some good benefits to it.
Hilarious. They're playing music that we listened to in high school.
Okay, come on, scroll.
Okay, phase 1, 2 stabilization and entitlement. So total raise is 30 million.
How to structure the 30 million inside the land stabilization fund. Tranche 1 is 10 to 15. Tranche 2 is 15 to 20. And then
hand off.
We hand it off capital to the QOF. Right. Get our money back out of it.
Clean exit paths.
Right. And here's the other cool part. As developers, we can maintain 30% of it.
That's
the QOF
amazing.
can take 70% of it.
Nice.
So for those of you who are new to this, like how long would this take you to actually like gather all this data and turn around and come up with all these different scenarios with the math and everything?
I think
Did we just save you a few months?
Is Nicholas still in here? Because I'd like to get his opinion. What do you think, Nicholas?
Yeah, I'm still on here.
Is this valuable, or are we chasing butterflies with this?
No, that's absolutely valuable. Yeah, that would take. I mean,
well, and you
full
for
time
an
probably.
underwriter, right?
Yeah, exactly. It gives you the idea of whether you're moving on a lot quicker too versus getting deep into it and realizing there's no reason to move forward.
Nothing there.
Yeah, like the amount of pencil sharpening we have to do now is like next to none.
Yeah.
Right. We don't sharpen our pencils until we actually, like, this thing will even make our documents. It wrote our LOI for us.
Yeah.
Right. And we sent it over there. And then my attorney provides us the opportunity, and what we can do is we can create documents that we can create contracts right here, download them and send them to our attorney, who then just hits it with the stamp if he likes it. If he doesn't like it, he says, hey, make these changes. I literally just copy and paste what he said and say, make these changes. It does it, right? It does it without back talk. It does it without an attitude. It does it without having to go on vacation. It does it without having to go on a coffee break. I don't have to wait for it to come back from the bathroom. Like, it just does it. You know how much of a pain in the ass
waiting is?
It is for, well, just like the human factor behind the psychology. Ready for this? I've had a situation where somebody produced something for me. I went back and took it to the professional. They edited it, brought it back, and I gave it to them. And they're like, you ruined all my work. And I had to deal with somebody's emotional baggage of feeling like they were rejected. You know, fast that F's up a deal. Like it'll put the brakes on a deal, because now I've got to deal with somebody's emotional something.
Trauma.
Right. And it's like, I don't want to do that in a deal. Can we just move past this? No? Okay. let's pay for a counselor. Let's just get a sofa, lay on it, get comfy, and work through our problems today. Like we can do that, or we could just go make $12 million. I'm down with the other. So go hire the counselor, get off my couch, move forward.
So here we are. What do we do next?
What we do next is we got a few minutes left. It's ran through this scenario. Again, I think this is great. The other thing is Amor. Is she in here today?
I haven't seen her. Is she there?
She's here. Yep.
Amor.
What? I just gave you a hard time and you didn't know I was here?
Hello.
Listen, I'm so used to you giving me a hard time that it feels like vitamins to me.
Oh my word.
I don't think I can go a day without vitamin D or more giving me a hard time. So if I don't have that, I am off the chain and off the rails.
And then Amor has a deal. I don't know if anybody else has deals we want to run.
Nope, we're gonna do Amor right now. I don't care
Amor.
about
It's all
else.
about Amor.
It's all about Amor.
It's all about Amor. It's all about the love.
So let's go back and go to Deal Hunter by Landshark real quick.
Okay. Here we go, Amor. We're ready to go.
Yep, hit that, and then hit that Deal Hunter by Landshark, and let's do a conversation. We're working with a member from the Landshark Mastermind who is now wanting to raise capital to put together housing for nonprofit organizations that do group homes, recovery houses, halfway houses, transitional homes, etc. And so our investment club is looking at putting together a $2.5 million fund using a program called Fractional. The fractional side of that will be raising $2.5 million to find property in the Chicago area and the Orlando area. Is that correct?
So they're looking for properties in Michigan, Wisconsin, Illinois, and Orlando.
Do they have metros areas in mind, or it doesn't matter? Because I'll find them somewhere in Wilmington, Illinois.
Yes, they actually prefer the suburbs, especially in Chicago, because they feel like Chicago proper is very hard for people with recovery. And so they're
Right.
actually looking for the suburbs is what they're looking
Right.
for.
Okay, so make sure that we are sourcing our locations to those areas. Find those states, find metro suburb area, suburbs to metro areas, and give us 5 properties to review from each state. And then we want to continue the conversation about how to structure the equity fund. Boom, bada bing. And so what we're going to be doing, if anybody is confused about what Fractional is a investment club. Wealth-Wise Women has started their investment club called the my7streams.org. It's a mastermind investment club that helps put together the capital necessary, but we're not necessarily having to raise it from accredited investors. We're able to actually raise these funds from non-accredited investors, but it's not a charity, right? It's an actual investment. Charity, you don't make money back from. But an investment you do. And when you're a non-accredited investor, Fractional gives you an opportunity to invest in impactful things that then give you some equity in it, and you get back some investment from it.
Yep.
Right.
So this is a way for we're putting together Tracy, Amor, all of us have come together, a whole team, to put these deals together so that if you're not an accredited investor, you get to participate and start building up your 7 streams of passive income. So I believe that every family, every person deserves 7 streams of passive income so that they can go on and create, 8 through 400 passive streams that are all now directed towards making an impact and a difference in the world.
We really want to be the Robin Hood of real estate investing. Like Robin Hood opened up doors for people to become stock traders, right? Like before Robin Hood, you had to go to Merrill Lynch or T. Rowe Price or whatever to be, talk to a stock trader.
E-Trade,
did all the trading for you. E-Trade was kind of there, but not quite, not like Robin Hood. Robin Hood made it to where like 9-year-olds could do this crap. So
we're going to make 9-year-olds
real estate
investors.
I
like it.
I was a legitimate.
Tracy loved that.
Ready for this?
He loved it. This is great.
I was a legitimate real estate investor at the age of 14 years old.
I have no doubt.
So my dad owned a fishing boat. We owned that boat out on Lake Michigan. And he was a charter boat captain on Michigan, Lake Erie, and Lake Huron. But Michigan was our home port. And so we kept our boat in that port. And so in the port, what we would have a long channel, and every spot had its own little parking spot for the boat. You pull in, park, tie it off, done. But that spot where that boat slip was had land that went straight up a hill to the parking lot. And so you could park your truck directly in your lot, and that was where you were at. So I had a job when my dad would go out fishing and I wasn't driving the boat. I would stay back and I would cut the grass on everybody's lot. And it was really cool because it was on a really steep hill. The only way to cut the grass was you had a lawnmower tied to a rope, no handle on it. You just pushed it down the hill and let it go down real slow and then cranked it back up with a crank and then moved it over and dropped it down and did it again. And so that's how I cut the grass on all these lots. And so one day I was cutting this grass and there was a lot where there was a sign that said for sale. It was an old guy's lot. And he wasn't letting me cut the grass there and kept getting bigger and bigger and started growing over onto my lot and on the other guy's lot. And then so my dad's like, call the guy and see if he'll just sell the lot, what he wants for it. And I said, okay. So we went and called the guy at the marina, and they told us how to get a hold of him because it just said for sale, no phone number. Right. And so we finally got a hold of the guy, Charlie Mitchell. And I called him up, said, Mr. Mitchell, I said, my dad owns the boat spot next to you. We want to find out how much you want to sell it for. He said, I'll sell it for $5,000. So I said, okay, I'll get back with you. I just might be interested, but can I call you back? I got to talk to my dad. So I went and talked to my dad. I said, Dad, how much did we pay for the lot over there? He said, we paid $9,500. Why? I said, oh, okay. So I said, I just wondering. I said, how much would you buy Charlie's place for? He said, I'll probably pay the same money. I said, would you pay 10 for it? He said, yeah. I called Charlie back. I said, hey, Charlie, I said, my dad said it's only worth $3,000. You want to sell it for $3,000?
Nice. You were such
and Charlie
from
said,
the very
Charlie
beginning.
Says, $3,000. Charlie, wait a minute for a minute now. Charlie says, $3,000. I said, Charlie, I said, I've been cutting that lot for the last 2 years and had it real nice. I says, and nobody bought it for $5,000. I said, you think I said, you think somebody's going to buy it now, even though I quit cutting a lot? He said, no, you're probably right. I said, I'll tell you what, I won't charge you nothing for all the lot cutting I did on it. I'll give you $3,000 in a week if you're really interested. He said, yeah. He says, I could probably do that. Then I understand. I went back and told my dad, and I said, Charlie wants 12. Dad, you good with that? He says, only if we can build a dock on it. I said, I'll get back to Charlie and let you know. And I went back and I said, Charlie, my dad said 3,000, the best as he can do. Are you good with that? He said, yep. I signed the contract with him, went back to my dad, said, Charlie wants 15 with the dock. Dad said, okay, here's your $15,000. Tell Charlie to go fast. When I went back to Charlie, I gave Charlie $3,000 and said, have a good day, sir. And I went and bought me an El Camino.
Oh my goodness.
14.
The question is, did your dad ever know that?
Okay. So your Charlie is done running.
Yeah. So anyway, back over here.
Goodness.
So what we figured out is, here we go. Look at Joliet right there, Naperville, Aurora, Plainfield. These are all my hometown spots. I know all those.
Oh, nice.
Right? So we know those real good. Then let's take a look at Michigan. We got a few right there in Grand Rapids, Grand Blanque, Bloomfield Hills, not bad. Right. So most of those houses are real expensive. You get into Milwaukee and Madison suburbs, again, those are going to be extra expensive because those are the north suburbs of Chicago. Wisconsin is actually the entire state of Wisconsin is basically Chicago north suburb. Like if you didn't know, that's what it is. Like, and then there's Canada. So Orlando area, Florida suburb. So what we're looking at, it says my blunt ranking for the first underwriting. Let's take a look at what these are. The top 8. They want us to go to Apopka, Florida, Kissimmee, Florida, Plainfield, Illinois, New Lenox, Illinois, Aurora, Illinois, Macomb, Wisconsin, and Muskogee, Wisconsin. I think those are all there. So how I would structure the 2.5 equity fund. So what we would do is the parent fund LLC raises the 2.5. The fund becomes manager member of property LLC, and then each property sits in its own LLC for liability isolation, which sounds pretty good. The strategy. The fund does not directly own or operate the recovery house. We just do a master lease with the nonprofit operator. Long-term leases with performance covenants, so that way they can have a chance to ramp up at
Yeah, they said 3 year, they want 3 year contracts, so that's good.
a 3 year escalation
Lease,
contract, or
a 3 year
just
lease.
total
They
3-year
want
lease.
they want a 3 year lease.
Will they go longer than that?
I'll find that out.
So that's one of the key things, is because to get a what's called a commercially backed lease, we have to have at least 10 years. I think it's 5, but I like 10-year leases for commercially backed. So it's going through all this. Biggest underwriting issues is that the real risk is not finding houses. It's municipal use and approval and operating strength and reimbursement quality. Those are the big key issues, right? So the other thing is exit strategy for operate or fail. Like, we got to have that in place as well, because we build it out to become a group home. You can never really turn it back into a personal resident. So you got to be super cautious of all that stuff. Fund docs, this will put all that together. We're not looking for it to do any of that stuff, but let's prompt it one more time. We got 2 minutes left. Okay. And we'll probably get into the rest of this tomorrow. I want to go ahead and add to this that we have the Titan 23 fund as the parent fund, and then we want to start the fractional account for this as well. So we would actually have 2 vehicles, one for accredited and non-accredited investors in the fractional account, and then just for accredited investors over in the Titan 23 account. And so every time we find a new property, there will be a new property tier added to Titan 23. For every property we source, we will create that lower tier entity to invest into, and it will be just investing into the asset, not into the operations. We want to see what it looks like to do a 5-year lease on some of these places at the local lease rate. So figure out what our lease rates would be and how we can monetize it enough to profit for our investment. And then we'll end the show on. So we were talking, we're going to carry this show now every day from 9 to 11. We'll probably go 9:30.
Starting next week.
Starting
this week.
Not this week, next week.
Monday,
the week after. 9 to 11, 2 hours a day. We're going to have a breakout room that starts at 10 o'clock. The breakout room is going to be depending on what coaches we have available and who's here, but we're going to test it and see how we do with it. But we'll have like people that want to go learn about free estimates, people that want to do Deal Hunter, and people that want to go do Opportunity Zone. We'll split everybody up and go into a breakout room with them for about 20 minutes and just focus and deep dive on that stuff. So we're going to have some coaches added to the room to do that stuff as well. And then what we plan to do is continue to express. Tomorrow we're going to talk more about Titan 23 because this will be thinking about it, and we'll pull it up tomorrow to discuss it. So, but I'm going to wrap up today with a prayer, and we'll see everybody tomorrow from the Curlin, as we'll be broadcasting during the Fact Right conference tomorrow. So bow your heads and say, Heavenly Father, we thank you for the blessing of this day and the blessing of this life, the ability to go out and do your will and to meet with others in the place they're at, to elevate them to become what it is that you wanted all of us to become, which is servants to your Son and all the people of this world that you've created. We ask that you guide us to do this in your Son's name. Amen.
Amen.
Everyone have a wonderful day. We'll talk to you all again tomorrow. Same bad time, 2 hour bet channel.
Yeah. Okay. Thanks everyone. You're amazing.
Thank you. Talk to you later.